This video will tackle profitability analysis. If you recall, in our previous video, we mentioned that there were 4 dimensions to financial analysis, profitability being one of them. Let's just pause and recap on what profit actually means. Profit was a calculated figure. We took all the revenues of the organization, subtracted all the expenses, and came up with a calculation of profit. So it is based on the accrual approach. It excludes acquisition of assets and repayment of loans. So we're just looking at that profit figure and then evaluating that against previous years and against other benchmarks. Your text takes you through the calculations of 4 different ratios. So in this video, I won't recap some of them. Rather, I'll talk about some other points that you might like to think about when you're doing the profitability analysis. The first is a point on the return on equity calculation. Now, return on equity is a very well-known and well-utilized ratio. But there's some important points about what that actually means. Don't confuse the term return as what's actually given back to the shareholders. In this sense and for this calculation, return refers to profit, as we will find it on the income statement. Some of that profit may be given back to shareholders in the form of dividends, and some of it might not be. So we are looking at that overall profit figure. We then compare that profit figure to the equity figure that's on the balance sheet. This is not necessarily the share price or the market capitalization of that organization. It's the dollar value that we see on the balance sheet. And included in that is both the capital contributed and the retained profits. So those are just some important things to think about when you look at that return on equity calculation. A point on not-for-profits. Those of you who are in government organizations or not-for-profits might be thinking profitability ratios aren't relevant. They still do have a role to play in evaluating your organization's performance. One of the ratios that you could look at that's particularly meaningful would be the return on asset. So this is looking at the operating result and comparing it to the asset base. Every organization needs to ensure that its assets generates sufficient returns. In addition, even though the organization's objective or goal might not be for profit, and it might not have to pay tax on profits, the objective may still be to make a surplus. Because remember that surplus needs to be available to replace assets and to acquire new assets, particularly if the organization is in growth. So therefore, some surplus is needed, and they may refer to that, in fact, on the income statement as a surplus rather than a profit. There are other ratios that you might like to look at which are not covered within your text. Refer to the Ready Ratios website. We've noted that within your slides, and that contains a number of different ways of evaluating profitability. They may provide perspectives that provide further interest in your evaluation of your organization. Let's turn now to the director's report, because that can give some additional contextual information that will assist in your analysis. To do that, let's go back to JB Hi-Fi and onto page 17 where the director's report is, and we'll take it from there. I've opened up the operating and financial review for JB Hi-Fi Limited. As I mentioned, this is going to give you useful context information about the organization and its performance. But a point of caution before you examine and have a look at it. This document's not audited. So while we can generally trust the information within it, remember that it does come from the perspective of the organization who's actually providing this. This is different to the information that's on the audited financial statements, where we've had that independent review of the auditors to say that the figures meet the Australian accounting standards and other regulatory requirements. So it's just something to bear in mind as you track through. If we start off, you'll see the organisation, there's a review of its operations, and we can get a sense of the type of activities that are occurring within the organisation. Nothing new here in terms of what JB Hi-Fi is doing, but any organisation that you're looking at, you can go in and have a sense of the activities of the organisation. Let's drop down over here into the group's financial performance, the highlights. And this is where we can have a look further to that point that I mentioned, they refer here to the underlying results. So when they use the word underlying, what they mean is that these are not the results that meet statutory figures or our Australian Accounting Standards Board figures. They are rather figures that have been adjusted by JB Hi-Fi, usually because they believe some of the items are not going to persist into the future. So the review, the underlying results, they've excluded transaction fees and implementation costs associated with the acquisition of The Good Guys. The 2018 figures, however, are the statutory results. So if we look, these over here, the figures that we see there would be exactly the same on the financial statements. The figures over here, you're not going to be able to match back to the financial statements because they've made these adjustments, which they believe are a once-off. So let's just have a look. We can see they've pulled out three key figures that we get off the income statement: the total sales or the revenue, the EBIT line or the earnings before interest and tax. That's an indicator of operating profit before we've subtracted out the interest cost and the tax cost. So just another metric of performance. And then finally, the net profit after tax figure, that's the amount that's available to the shareholders. And we can see some highlights over here of the change, the movement in the year, and in terms of analysis, we call that horizontal analysis, so the comparison of one year to the next and looking at the change. Now, you could expand this and go back to previous years, pull up the 16 and then the 15 figures, and build a trend, and that will give you a picture of what's going on in the organization. They've got two other metrics, the earnings per share, and that figure would by and large be taking the net profit figure after tax and dividing that by the number of shares, and we see that the earnings per share is 203 cents per share, which is an increase on the previous year. The next actually looks at the dividend per share. So that's not necessarily a measure of profit, it's the cash that's gone back to shareholders per share that they hold. So a measure of profit per share and then a measure of the return given back to the shareholder per share. There's further explanatory information that I won't go on to into on this page. These are the sorts of things you can read as context and to help build your knowledge of what's going on in the organization. So I say this report gives you information to assist with your analysis, but shouldn't be relied upon as an analysis because of that issue of it not being statutory and because it's non-audited. Now, the other thing that you will be able to pull up from this review is divisional. So if the organization consists of a number of divisions, and in this case, JB Hi-Fi has got three main divisions, JB Hi-Fi Australia, JB Hi-Fi New Zealand, and The Good Guys, we can actually go in and look at each division and look at some of the figures across each of the divisions and see which ones are contributing profit and which ones are maybe not contributing profit, or get a sense of comparison. So again, we have our total sales figure. In this case, they also give the gross profit. Remember, a gross profit figure only applies in either a manufacturing or a retail organization, one that has product. If it's only services, you will not be able to calculate that gross profit figure because there is no product involved. And then an EBIT line, in this case, they don't give the net profit after tax, and that's because the tax applies across the whole business. So it's not an applicable figure. And this line, the EBIT line or the operating profit line, is often the bottom line that we get to when we're comparing divisions. So we can actually look at these three divisions and see how they are contributing to the overall profit position of the whole organization or the whole group of JB Hi-Fi. And then they'll follow some narrative. So as I said, some useful content there. Just recapping that when we are looking at profit, it is that calculated figure, revenues minus expenses, and a useful way to examine an organization even if you are a not-for-profit organization. I trust that this assists with your analysis of your own organization's profitability.